Good morning, everyone, and good morning, ladies. Thank you for joining me. Terrific panel, all women, power women. Let's start out by defining, first of all, what we're here to discuss, because we're talking about an impact investing. And so are we discussing then activist investing when big corporate funds are pushing for change, or individuals putting money behind companies that they see as having a positive societal impact? What are we talking about?
Well, I would suggest that impact investing is simply investing, but it has an element of intentionality. There's a purpose in terms of having some kind of social impact positively. So intentionality and measurability. There's a way we want to prove that this money is being invested with impact. And then aspirationally, there can be something some people call additionality, meaning, but for this investment, something would not have happened, something that is desirable. So that's the aspiration. Intentionality, measurability, and I think ultimately all investing is impact investing. So these definitional issues, sustainable investing, socially responsible investing, double bottom line, triple bottom line, values-based investing, again, it's all investing and thinking more carefully about risk-adjusted returns.
Saadia, Yasmina, anything to add?
Yeah, I mean, I think I would add that in a world where I think people feel that there's so much that needs to be done, there's a real excitement about the ways that investing can help catalyze change and impact as another kind of tool in the toolkit. And so it's a little bit of a different perspective from ways we can shift investing to ways we can shift social change. And so there's a lot of excitement, I think, coming from the public sector, from the nonprofit sector to say, could we be using capital in more catalytic ways? And that's also bridging to the impact investing world.
Erika, how do you interest investors in this form of capitalism that I've heard you describe it as regenerative and not exploitative? And is that getting easier?
You know, I think it is, and it's getting easier for a number of reasons. First, we have social media, which makes transparency just amazingly powerful. We have big data, which is helping us turn noise into insight. We have a massive intergenerational transfer of wealth, right? We're starting to have disclosure metrics for companies, standards for disclosure around environmental, social, and governance issues. All of those things make it easier. The biggest issue we have to overcome, which frankly is a myth, is that there is underperformance associated with sustainable and impact investing. It's a myth. We have to put it to rest. And the fact is, if an investor does not systematically look at ESG factors, they are breaking a fiduciary duty of care.
Do you not still, though, have people who would say, look, I'm just interested in maximum returns. If I want to do good, I'll write a check to my local charity.
Absolutely.
You've got to overcome that, right?
Yeah, I mean, we have to overcome that, and that is very much still a common view. The issue is if you can have an economic discussion with an investor and say, sure, run your business, do your investments, and do a little philanthropy over here, just know that the little philanthropy, you're guaranteed of a zero return, and you're giving up an economic multiplier effect that can make your impact so much greater. But sure, do a little thing over here. So the reality is, if we talk about economics and finance and business and corporate profitability, revenues, costs, and risk, we can have a conversation without even using the word sustainability.
Saadia, how do you at the Rockefeller Foundation, how are you using innovative finance to better the world? Explain to us what that means.
So as a foundation, we've been on this journey of impact investing for a while now. And our perspective and what our contribution to the space has been has of course shifted over time as well. When we talk about innovative finance today, that for us is a reflection of expansive set of financial instruments, and that is across asset classes. So some people think, well, if you're talking about investing for good, that is a certain type of asset class and it's a certain type of product and it comes with a certain type of returns. And it goes a little bit back to what Erika was saying before. That's not what it is. You can do it with private equity, you can do it with public equities, you can do it with fixed income as well. So back to your question, innovative finance for us is an expansive set of financial instruments that have the ability to mobilize money from capital markets towards efforts that deliver social, environmental, and economic impact. Now, whether they do it in the name of sustainable finance or they do it just because, that's how business has always been done, we're a little bit indifferent about. But for us, it's about how do you open up capital markets to go to places where money isn't flowing, or how do you take the money that is already flowing and make sure that it does better for society?
Can I do a little shout out for Rockefeller?
Go ahead.
So as switching hats, as an entrepreneur and thinking about a business model, it was at a Rockefeller Foundation event when I heard the expression or the discussion about new companies and where they can have impact at scale and how you do that. And so not only does Rockefeller offer catalytic financial capital, but they offer catalytic human and intellectual capital. So thank you for that.
Thank you.
Well, Yasmina, I'd like to talk about Acumen, and I think what you do is so fascinating because you're looking for entrepreneurial approaches to tackling poverty around the world, and that is so huge. But you're usually looking at smaller, often startup type of organizations. Why do you think that focus is so critical?
So I think for us, in addition to the power and leverage that capital brings, we think entrepreneurship itself is such a powerful driver of value and innovation. So when we look at issues of poverty, whether it's access to clean energy, safe drinking water, affordable healthcare, our view is that in addition to all the other initiatives that are trying to tackle them, the dynamic, creative, relentless efforts of entrepreneurs to come up with creative solutions should be a big part of how we solve the problems. So just as one example, we work with a company in India called Frontier Markets that's really looking at last mile distribution for innovations in energy. They've recognized that there's all kinds of great affordable clean energy technologies, but they're not available to the people that need them most. So she's developing a network of thousands of women micro-entrepreneurs who are using the sale of these products to boost their own incomes, reduce expenditures for the households they work with, and ultimately create clean energy solutions.
So you're basically nurturing these smaller companies so that someday they can end up in Erika's impact portfolio?
Absolutely. And I think what we're really excited about are innovations that can scale. The path to scale is different for different companies. Some of them will go on to raise tens of millions of dollars from commercial markets. Some of them will scale through government partnerships, and some of them will actually scale through corporate partnerships. So this particular company wants to partner with Unilever to leverage their distribution networks and introduce other products that have positive impacts for families. So there are some corporations that are also seeing this innovation as being really valuable to their own sort of sustainability or ESG efforts.
That's so exciting. Erika, tell us, how do you decide what companies you include in your impact portfolio? What do you look for? And then what do you purposefully exclude?
Right. We're more for proactive investment than exclusion. Exclusion is one way to invest, but we actually are looking for transformative change. And so at a very high level, I mentioned, financial capital, human capital, and then there's natural capital. So we look for companies that are not doing business in an extractive way, a value extractive way. Companies that are intentionally looking to rise to the top in terms of whatever their business model is. Companies that are transparent, companies that are consistent, where there's accountability, where there's a thoughtfulness about disclosure.
You want to give us some examples?
Sure. We've all mentioned Unilever. It's amazing in terms of the intentionality. Paul will do everything from, think about a big target for hand soap to have a fancy dinner out of a dumpster with food waste that is turned into a gourmet meal, right? So experimentation, dealing with innovation. Innovation very different from invention. With innovation, we're talking about ongoing change, changing human behavior. So Unilever is always a great example. People use it. But think about Intel. Think about their supply chain management, understanding what's being put into their devices, right? And think about a Patagonia, who thinks a lot about recycling their garments. They'll take anything back, we all know, if you don't like it. And then there's other companies in their chain that will not only take it back, try to fix it, and not send it to a landfill, rather, they'll turn it into feedstock for more product at Patagonia, right? So what we're talking about is an effort for a company to get into a circular economy where one day, aspirationally, we won't have a concept of waste. Right? We won't be using a planet and a half of resources every year. We'll be respecting all those kinds of capital. And then you get to work for a company that you are proud to go home every day and say, my company helps to avoid the extinction of 10,000 species every year, because that's what's going on. So companies that are honest, companies with boards that are stewards of our capital.
Saadia, tell me how the Rockefeller Foundation is using, excuse me, innovative financing, in particular, to close the gap when it comes to financing the 17 UN Sustainable Development Goals, because I know it's a huge gap, and the amount of money we're looking at needing to spend by 2030 is like 50 to 70 trillion.
Right.
And we just don't have that right now.
Yep. Well, we have it. We just don't have it in the public budgets and then the philanthropic budgets. And I think that's also the reason why the conversation around new financial instruments that can engage capital markets and drive the capital towards efforts that are financially attractive, but at the same time also deliver development impact become extremely important for a foundation. So our mission as a foundation is very broad. It's global. It's to promote the well-being of humanity. And it was around 3 years ago that the Paris Climate Agreement, as well as the Sustainable Development Goals, which are development goals that cover all countries, so it's not emerging or developed, but basically everyone, were getting finalized. And one of the amazing things that I think happened for our sector that kind of lit a fire under all of us was that there was a price tag that was attached to these agreements. There was a price tag that was attached to the Paris Climate Agreement and the Sustainable Development Goals that wasn't in the hundreds of millions or billions, it was in the trillions, as you just said. And then the question around how do you make these agreements a reality, not just a policy framework, becomes very real when you sit down at a table and say, what can we do? And what is the role of the private sector? And what is the role of the public sector? And what is the role of philanthropy? So what we do with the kind of resources we have available, and sometimes we call it society's risk capital, is to say we need new solutions. We need new thinking, because if we just continue doing business the way we're doing today, we're not going to be successful. So let us put up the money in the very early stages and fund some of the most promising ideas that we're hearing out there, right? With the understanding that innovation is risky and there are no guarantees. So a lot of these ideas may never materialize into actual instruments that launch and show their viability so that Erika can then take and put it out in the world and help us scale it. But we'll do it because there's a need for new thinking, and that is what we have been doing. So similar to what I said earlier, it is saying, what do we think can be done to address the solution like the wildfires and drought in California, right? There's a scientific solution in place that has to do with maintaining the health of our forests. Our US Forest Service doesn't have the money. Philanthropy can't provide the money. Can we develop a financial instrument that would allow private investors to put money behind doing the restoration the way we know will help, because we have decades of science behind it, and that's something that just launched earlier this week called the Forest Restoration or Resilience Bond, sorry. Or it is, what just launched also this week called the Blue Bond, which is the Seychelles government put out there to raise resources to do marine protection and to build sustainable fisheries. So the bigger picture, sometimes people get slightly nervous when you start talking about a gap that's in the trillions and saying, what can I as a small institution do? Mm-hmm. But I think kind of understanding what our resources are set up to do, and then focusing on that allows everybody else to kind of contribute the best they can as well.
Can I just interject to give context, scale? So this past year, I think the data comes from Bloomberg, about $400 billion was put into alternative energies. What is needed, if we're going to get anywhere near what the Paris Accord was looking for. What is needed is about 1.5 trillion. All right, so that just gives you context, and that's just for climate change we're talking about. So when you think about everything else we have to deal with, it gives you some context.
I want to go to audience questions in just a second, but quickly, Yasmina, I just wanted you to tell us briefly, how is it that you are able to assuage any concerns on the part of your corporate partners, because you do have larger corporate partners, that their money, is safe, is not at too great a risk when they're investing in these smaller startup operations?
Yeah, I mean, I think for us, it's less about convincing the corporations that their money is not at risk. I think what works well is when we talk to companies that are already very present to the risks in their business model. So they see the risks of a totally unsustainable cocoa supply chain. They see the risks of the low wages of their suppliers, and whether it's an aging farming population or whether it's reputational issues around child labor, they are present to the risks, and they're saying, we want new ideas. They're not saying we want safe, we want proven. They're saying we don't have all the answers right now. There are challenges in our business model that put our industry at risk, and that's what's opening up the eyes of a lot of industry leaders to saying, where is innovation coming from, both in terms of how we invest and who we invest in? And they're looking to folks like us to say, we're open, we're ready now. I think there's a huge sea change in the corporate world saying, we really want to be part of a conversation that's about using our capital not just to make money and do good, but to actually create transformation.
Really exciting. All right, well, let's go to the audience. And if you would, raise your hand and identify yourself. And let's see, we got anyone out here? And if not, I will continue with my question. So, okay, we have a hand right here. I knew this wasn't a shy audience.
Celine Johnson, thank you for this discussion. Help me understand how you bridge, and if you need to bridge, the gap between the local efforts or the smaller size effort and the scale of the funding needed. We talked about climate change. Do you tell a company, you know what, we need your money, but maybe we need it here, not here? How do you sum up, is this a large sum of small investments, or do you actually guide them for, a bigger investment in a bigger project?
Who wants to take it?
I'll go first, if that's okay. In some cases, what we have seen work is you help aggregate the smaller things into something that you can present to investors as a bigger package that fits their requirements as well. I mean, I think one of the things we've realized is we can't be naive in the process in terms of expecting everybody to start doing business differently, but to say, can we take all the smaller things, aggregate it, package it up such that it is attractive to the investors? One of the examples of something we funded and launched earlier this year is called Land Degradation Neutrality Fund. And it is a fund that basically invests in rehabilitating degraded land. If you look at what that land looks like, where it is, what the individual amount needed for each small piece of land is, it's never something that you would be able to sit down and talk with an institutional investor about, because they would say it's not worth our time because it's such a small dollar amount. But the entire effort there was to say, how can you take the footprint that a lot of the NGOs have in place to work with those businesses or those farms and aggregate it and then bring it to investors in a shape and form that they recognize and they would find interesting and attractive.
Yeah. Just one example, we work with a company called Autodesk that's one of the leading providers of design software, and they think that core to their business is going to be showing how that software can be used to provide clean energy and clean tech solutions. So they were looking for innovative entrepreneurs that could leverage their technology initially as a way to kind of donate it, but mostly to get it out there and really kind of build their identity in that space. So they were looking for individual companies and really struggling in terms of having the bandwidth and the resources and capabilities to do that. So they came to us as an aggregator. And so we're able to bring together a network of 20 to 30 energy enterprises that they can then work with. We're almost providing a service to them, but it's linked to their own vision of their company and what their role is in the world. We didn't convince them to care about clean technology as a really important emerging industry. They figured that out through their own leadership and then started to look for creative partnerships to meet that goal.
And on a note of optimism, new small companies, regional companies, are the starting point of, massive economic change. That's where growth comes from. It's new companies. And there's a piece of data, I think it's McKinsey, has said that over the next 10 years or so, we're going to see 60% of startups have a social mission. All right, so this is a very, very exciting trend because again, that's where the economy finds innovation and growth. And what we're seeing is very large companies. This came up before. Very large companies are starting kind of skunk works. They're doing innovations. They're spinning off, and they're looking to buy and invest. So impact at scale needs these smaller companies, which are doing things in a different way, where big companies have an enormous amount to learn. So there's a lot to be optimistic about.
Another question? We have one here in the front. Excuse me.
In the public sector, there has been a trend toward passive investing. Passive investing, by its definition, means nobody makes a judgment. How do we make a judgment on ESG if no one is making a judgment?
Fascinating.
Should I take that?
Go for it.
So I personally think that this trend may start to reverse a little bit. It has to be, cost efficient for it to be that. But the reality is, we have to know that the data, all right, around corporate disclosure on environmental, social, and governance issues, which are material, they are not non-financial. They are financial, they just haven't expressed themselves yet. But the quality of the data is problematic. And so when we look at passive investing, often that's based on figures and numbers and data that are systemically flawed. So there is no investment insight per se there. When we look at active investments, I mean, you're thinking about really participating in the economy, participating in the growth, thinking about risk-adjusted returns. So I think this trend is great in a kind of a market that's just kind of going higher. But I think when there's more volatility, in particular, more active investing styles are appropriate. So.
Could I also add to that?
The last word.
Yes. Well, I hope it's worth it. I think there's an interesting development happening even in the passive investing space, where there's a question of, can you bring active ownership to that space? Can you really go in and say, what does the E and the S and the G in passive investing mean? How do you create engagement with those corporations, not just because it sounds nice, but because it will impact their bottom line, and we're all playing for the long term, particularly the passive investors. So how can you work collectively across different investors and industry to make impact?
Right. Thank you, my wonderful audience, for your great questions, and thank my terrific panel, Erika, Saadia, Yasmina.